£6,000 worth of income, which is tax-free as a limited company owner. How on earth is this possible? Well, check out this video as Louise and I will share those details with you. I came across Building Society recently, which is offering a new direct loan ISA. Just wondering if you've heard this. Just so everyone else is aware of this, what is a direct loan ISA? I'll give a recap and then hopefully, Louise, you can give some ideas as well. So we talked about a limited company. Let's say we're talking about it buys an asset. It doesn't matter what type of asset, but if it buys an asset for £100,000 and it gets a loan, whether it's a mortgage or a commercial loan, doesn't matter. And that loan just happens to be £50,000. And then you loan it as an individual, £50,000 into the limited company to pay for the other half, then that £100,000 can go out the limited company. But, you know, the limited company now is an asset at £100,000. It's got a debt to the bank from £50,000 in form of loan, mortgages, whatever. And the limited company owes you £50,000. So what can you do? Well, that £50,000 is a debt. You'd expect a commercial rate of return on that. So let's say 8-10% or something daft like that. And that 8-10% can be paid to you as an individual. Now, the problem is with that is that if you are charging, if you've got a £50,000 loan, your interest alone itself might be £5,000 per year, which actually is that's you're going to be taxed on that from an income tax perspective from HMRC on your self-assessment tax return. That's not good either. It's because you've now kind of got a corporation tax relief, but now if you are a high rate taxpayer, you start paying 40% tax. Now, you can earn some interest tax-free, and you do need to get some tax advice because it really does vary from £5,000, I believe. Is that right?
Well, depending upon if you can access things like the personal savings allowance and the savings allowance, you can actually earn up to £6,000 worth of bank interest tax-free here in the UK. But there's a lot of moving parts and there's a lot of connections as to, well, if you have this kind of income, you can't have that. So there's an awful lot. Yeah,
you do have to be careful. The one thing I would say is that, you know, as a basic rate taxpayer, you can earn £1,000 anyway, tax-free, £500 if you're a high rate taxpayer.
This is interest.
This is interest. But that's way less than £5,000. So the concept of using the direct loan ISA account is whereby your money is set up with an ISA. You have this ISA as a debt to the limited company. The interest then therefore pays into via interest from the limited company into your ISA. Well, the ISA grows tax-free. So you then don't have any tax. Now, the problem is with this, and we've done some research for some of our clients, for basic rate taxpayers, it doesn't make sense. And the reason for this is because the institutions that are creating all this kind of stuff are telling people to charge a crazy amount of interest, which goes against HMRC rules and regulations. So you have to be a bit careful about their freedom of marketing information. And it's not tax law, it's marketing information. So you have to be careful about that. And you've also got the stage of, well, their fees. You know, how much tax do you save as a result of this versus how much fees do they charge? So if you're a basic rate taxpayer using an ISA account, then actually you could be paying them, whatever institution is offering these direct loan ISA accounts, more money than tax-free saving. So who's winning? Not you. So it really works if you're a high rate taxpayer, you're moving money in, or additional rate taxpayer, and you're moving money into an ISA account. That can work very, very well, but you do need to be careful.
And just to keep you up to speed, basic rate taxpayers are for 21-22 tax year, the year we're in right now, it means you're earning a total of £50,270 or less.
There are many live events that you can register for free. There are 4 events that's showing HK to UK to help people move from Hong Kong to the UK. The Property Expert Panel. If you're a property investor and property developer, this will be very useful for you. Tax Q&A. If you want to ask proactive tax questions in regards to structures and how to mitigate tax in the future. And finally, UK tax return Q&A, as it says, to deal with questions in relation to your tax returns before you submit it to HMRC. Don't forget that these events are live and will be shown on YouTube the day after. So why not register today, start saving tax tomorrow?